Ladies and gentlemen, good day and welcome to the Q3FY22 Earnings Conference call of IG Petrochemicals Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pramod Bhandari, Chief Financial Officer. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everybody. On the behalf of IG Petrochemicals, I extend a warm welcome to everyone for joining us on the call today. On this call, we are joining by SGA, our Investor Relations Advisor. I hope everyone has got an opportunity to go through the financial results, which was declared last week, and the investor presentation, which was uploaded on the company's and the stock exchange website. We will give you a quick overview of the recent development, followed by the operational and the financial performance of the company. On the operational performance side, we are pleased to say that IGPL has reported excellent quarterly and 9-month business performance in terms of the revenue, EBITDA, and profitability. This stellar performance has been primarily driven by the fully operationalization of PFO plant along with the MA for the last year, and the robust product demand and the better price realizations of both the products, phthalic and malic, in the domestic market. On the product side, we are predominantly focusing on the 3 products, which is phthalic anhydride, malic anhydride, and advanced plasticizer. Let me cover you the scope and of each of the products. Phthalic anhydride is our primary product. We have not only pioneered this product in domestic market, but also pioneered in the leadership position in the global market. IGPL ranked number 2nd globally in terms of scale and size for the purpose of setting up of the plant and the production of phthalic anhydride. During the last quarter, we have announced our brownfield expansion of the phthalic anhydride at the same location of Taloja, which we called it a PA5 unit. We are pleased to inform you that the primary work for the PA5 has begun, and that expansion will be expected to complete it by March 24. Following the expansion, our overall capacity will grow from 222,000 ton to 275,000 metric ton of phthalic anhydride. Expansion will eventually improve our capacity of malic anhydride and benzoic acid in similar line. Malic anhydride and benzoic acid are the key products created by the wash water while producing the pen. The cost of production of these products are insignificant because they are generally manufactured through the wash water. The price of malic anhydride has increased for a brief period of time during the last quarter, and this has reflected in our profitability as it directly flowed to our EBITDA. Our third vertical is advanced plasticizer or DEP. The expansion of DEP commenced commercial production in November 2021 with a total capacity of 8,400 tons per annum basis. This vertical has begun to contribute, but very marginally, to our total business. We anticipate that the capacity will be fully operational in the next 3 to 4 months. This will further boost to our company performance in terms of the revenue and EBITDA, and it will also complement our primary business, will be part of the forward integration. While the chemical industry at large faced the issue of rising transportation costs, but we had a minimal impact because of our source of raw material sales both are based in the India or domestic market, and most of our clients are in the western part of the India. According to our internal estimate, import of sand has gone down sequentially on quarter-to-quarter basis due to the supply chain disruption as well as rising logistic costs. So all the guys are preferring domestic players to supply them, which has helped all the Indian manufacturers. According to the industry data, last 2 years the global logistic costs have soared significantly, but domestic player having the upper hand in this case. We have witnessed robust demand in domestic market, which is also growing at a healthy rate of over 6%. IGPL will always be a favored partner since clients always prefer a strong and capable partner which can provide seamless supply with a short period of time. IGPL has embarked a few growth plans given the growing demand of downstream derivatives. The capacity expansion of DEP and expansion of PA5 has given a thrust to the company's growth trajectory, and same will be manifested in the coming years. Over the mid to long term, Indian government continued to underscore the necessity of public investment in infrastructure. It broadened the scope and the concept of policies like concessional tax rate for setting up a new company at a new location, Atmanirbhar Bharat, PLI schemes, which contributed to the Indian $5 trillion growth trajectory story of the Indian economy. This structured approach provides the required momentum and generates a very conducive environment for the Indian manufacturing. The long-term growth story of India remains intact, and the same has been watched by the many global agencies like IMF and the World Bank. And we also believe in the infrastructure growth along with the growth of the economy. IGPL being the largest player in India and enjoy the cost leadership in production of phthalic anhydride driven by a highly integrated and technology-driven production facility. Our long-term goal is to become a well-diversified chemical company with a leadership position in our core business. We will diversify our business product range by expanding into various downstream derivatives and specialty chemicals to meet our vision to generate 30% revenue from non-phthalic product by 2025. We will continue to prioritize profitable growth while investing in expansion and timely execution and operational excellence. We are well positioned to maintain our growth in coming period as the revenue contribution from the advanced parts is yet to be commercialized fully. In terms of financial results for the Q3FY22, total revenue stood at 509 crore, up by 61% on year-to-year basis. EBITDA was 114 crore, up by 18% on year-to-year basis. Operating margin at 12.4%. This increase was primarily due to the better spread, better product mix, and profit after tax stood at 74%, a growth of 18%. On 9-year performance, 9 months ended, revenue up 1,371 crore, up by 91% year-on-year basis, mainly because of the PA4 production and the robust demand of the product, as well as increase in the prices of the crude, followed by the OX and PE. EBITDA is up by 91% to 298 crore. Operating margin stood at around 21.8%, and profit after tax stood at 191%. It is pertinent to note that in the last year we have made a PAT of full year FY21 190 crore, while in this 9 months we have crossed the 191 crore PAT, a growth of 115% on year-on-year basis. We are happy to share that IGPL long-term debt rating has been upgraded last year from A+ to AA- by India Rating, which is a part of Fitch India, and IGPL has become now the net debt zero company. With this, I will conclude this presentation and open the floor for further discussion or questions. Answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khetan from SMIFS. Please go ahead.
Yeah, thank you for the opportunity. Sir, my first question is on the other expense part. So if you look at the other expense in this quarter, on sequential basis, it is lower by almost 1%, like despite increasing in freight cost and many other expenses by most of the companies, your other expenses are declining as compared to growing revenue. So what is the reason for lower other expenses?
You are talking about the other expenses which has been reported 13.66 crore.
Yes, sir. In this quarter, what the other expenses of 35.8 crore that has been reported.
So that is the total, including personal cost. So I think it is majorly in line with, there is no reduction except 1 crore or 1.5 crore. Otherwise, the other expenditure includes basically all the expenditure, consumption of stores, insurance premium, rent, traveling, legal expenditure, including the CSR which we have spent. Some amount which we have deposited in CSR because the government has provided a scheme which need to be spent over the period of 3 months. Otherwise, there is no major change in the other expenditures.
Okay, but so hasn't there been impact of the rising freight cost which we have taken? We believe so. Our 25 to 30% revenues from exports. So considering that, also freight cost has gone up considerably for many other companies.
Yeah.
So you're not witnessing that similar trend in your.
So let me reassure you. The freight cost was around 8.5 crore compared to for the previous quarter was 7 crore. Before that it was 9 crore. So our freight cost is mainly the logistics cost, which remain almost same or similar to that. However, there is a change in the container cost, but for the purpose of sales, when we sell to a particular party, whatever is the actual freight we are realizing from that party. So we are neutral in terms of the freight to the export. And in terms of domestic also, we deliver 80% of the delivered supply. So whatever is the cost we actually incur, we recover from the party by way of sales realization. So it hardly has any impact directly on the company.
Okay, got it. Sir, if you can share some of the data points. So what is the revenue of maleic anhydride in this quarter and for 9 monthly? If you can share the numbers.
For the quarter, it was around 35 crore.
35 crore per quarter. And for 9 monthly, sir, it would be?
Just a minute, huh? I will tell you this. For 9 monthly, it was around 70-75 crore.
70-75 crore. Okay.
Yeah, because the maleic anhydride price has increased substantially in the last quarter, which has resulted into the overall revenue jump in the maleic anhydride.
Okay. So currently also, sir, we are witnessing the similar trend, so that so the rise in the prices. So is that consolidating at higher levels or?
It's already started consolidating. What happened is when the crude price has gone up, accordingly the OX price has gone up and PA price has gone up. When the PA price itself is between 13 to 1400, to maleic has to be in the range of 1800 to 2000. Right now it is consolidated between that level only.
Okay. And then one more question related to crude part. Now we are witnessing that crude oil prices, they are witnessing a relentless rally. Now they are above $92 a barrel. So if I compare this situation similar to around 2018 levels, so during that time also the crude was at similar levels. So I just want to understand how the demand dynamics would shape up. So are your customers open to negotiating the higher prices of phthalic anhydride? Considering the rise in crude, so that will also follow in phthalic anhydride.
Right now, the demand of the phthalic anhydride in domestic market is very good, and whatever is the price changes in the crude, which is impacting the OX, accordingly that is impacted to the PE. So right now, the prices are fully transferable to the customer, and it's also depend on the industry to industry. For paint, it doesn't make any difference. It's hardly 1 or 2% of the raw material. For other industries, which 40 to 50% up to a certain level, it will be sustainable. And beyond that, because crude historically has already gone around 120, 130, 140. Right now, it is in the level of $90 per barrel, and we believe that this is the fair. It has to be between 60 to 90. And right now, whatever is the price increase happen in the case of OX, we are able to pass on to the customer in the way of PA.
Okay. So sir, just if you can, so I'll just twist the question. So what could be the level of crude? Suppose if it goes above $100 a barrel, so can we consider the demand destruction to start from that level?
I think it is too premature to comment on that, because what happened is we are supplying to more than 20 industries. Maybe 50%, 60% industry will be able to take, 50% may have some resistance in terms of the demand of the final product. But having said that, right now the demand equation in India is gradually going up to 6% plus, and a lot of construction activity in terms of real estate is happening, where we need to supply our product to the paint, plasticizers, DEP, DOP, BIP, even PVC players. The demand side is not an issue, but I think crude, of course, I can't tell you today what it is the impact, because right now it remains intact. In future, it's all depend upon the crude pricing moment. We will need to see and judge how it is moving.
Okay. So one more question regarding so the sequential growth of 7.6%. So how much is from volumes and realization?
So I think most of the growth is 60 to 75% is on the volume, and around 20 to 30% is on the pricing. Because if you look at the margin, it remained almost same gross margin from quarter to quarter, from previous quarter to this quarter. It is the volume which has grown, and there is a better realization. Because as you are aware that company has a better efficiency in terms of the yield, then what happened is if the price of the phthalic anhydride goes up, what are the advantage you are getting for the yield that is available at a higher price? And second, the prices of the malic and the benzoic acid will also go up in that line, which directly translated to EBITDA. So that has also contributed to the higher EBITDA for the quarter.
Okay. Sir, just one last question. Sir, now what we had witnessed for the last 1.5 years, that phthalic anhydride prices were quite volatile as compared to orthoxylene prices. Now we are witnessing the trend wherein phthalic anhydride prices are somewhat consolidating around 85, 90, 95 rupees a kilo, but the orthoxylene prices are giving a sharp upmove considering the rise in the crude prices. So what we are witnessing that spreads on a quarterly basis are getting compressed. How are you witnessing this trend, sir? What is your?
So I think there are two clear scenario emerging. Right now, whatever is the price increase in the crude and the oil, accordingly, the prices of the phthalic are changing in the domestic market. And responding to your second question, right now the pricing is around 100 to 105, not 80 to 90, because the crude itself or the oil itself is around $950 to $1,000 per ton. So basically right now, because of the robust demand and it is catering to so many sectors, so one or two sectors are not doing well or demand is impacted, it doesn't have any impact, because even today the India is importing around 1 lakh to 1,20,000 tons in a year of phthalic anhydride. Not only the existing industries are growing, but also a lot of new sectors are being added. Whenever there is a growth in economy and infrastructure, you find there is a good amount of growth you will see a witness into the phthalic anhydride. So price are right now in line with the increase in the price of OX, and similar way you will see the price rise in the case of PX also. So right now there is no problem, and we believe the crude has also consolidated at a level of now 80 to 90. OX and phthalic is also in the similar level in line with the crude prices, which is consolidated at that. I don't think till there is a sudden surge in the prices of the crude and the OX, I think it will be stabilized at that level, and we see very good demand at the current
level. Okay, sir. Thank you, sir. That's it from me.
Yeah.
Thank you. Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, hi, sir. Thank you for taking my question. Am I audible?
Yeah.
Yeah. So first of all, I would just like to understand what is the utilization level for our plants as of now, and when we are adding this new brownfield capacity, how much time it will take to reach up to the peak utilization level?
Sorry, I'm not getting your voice. Second question. Can you repeat it again?
So firstly, what is the utilization level as of now for our PAN and malic? And once...
Yeah, which is 90 to 92%, which is the historically for all the plants we maintain the capacity utilization for both the phthalic and malic new plant at 92%.
Okay. And our brownfield capacity, which is about to come in 24, so how much time it will take to reach up to again, let's say 85 to 90% kind of level?
Maybe 3 to 6 months. Because generally, whenever we start, it happens in 1 or 2 months. But for the purpose of taking the precautionary measure, or for the purpose of being conservative, you can assume, because our target is to start the plant by March 24, and it may take 3 to 4 months to ramp up into that capacity level.
Okay. So now, considering the number, as you have indicated that most of it is a volume growth for us in this quarter, and since already prices are much higher for all the products, so just wanted to understand how our contracts are arranged and how it is getting revised, and if at all we are going to see some price hike or impact of price hike in the coming quarter, or it will be more or less the same realization for us for the coming quarter as well.
So it's very simple. In all commodity play, the quantity is fixed in the contract, price is always market linked. So whenever there is a change in the price of the crude and oil, accordingly the phthalic prices keep on changing, because it's a link with the international market price and the margin. Of course, there is some premium is there. Then there is impact of, if you compare the import parity, the freight, insurance, transportation, duty, that is there, because you charge premium because you are able to supply the product in period of 2 to 3 days or 7 days to the party. So right now we are seeing the good demand at even in the current pricing level, and we maintain that this demand will continue to maintain. And right now, your question was what is the impact? Because whenever there is a change in the works price based on the crude price, we have able to pass on that to the customers on the phthalic anhydride prices. So that is being maintained continuously. So that is the reason we have seen the profitability growth. Of course, margin remains same, but there is a volume growth that has reflected. And at a higher price, because of your efficiency, you are able to get better advantage of your yield at a higher price, as well as you are getting the better price of your product like malic anhydride and benzoic acid.
Okay. No, I mean, that is what I mean, since how much, I mean, how long it takes to take a pass on this? I mean, what is the time lag for us normally?
Like 10,
1 quarter, 2
15 days. Every 15 days, there is a change in the prices of the OX, which is linked with the crude, and accordingly we also revise in that line.
Okay. And now on the demand side, as you are saying, it's demand environment is quite strong and still import is there, a significant amount of import is there. So just wanted to understand which sectors is there which is actually getting a higher demand or traction, or it is across the industry which we are serving.
So I think
any particular thing to highlight?
All the sectors are doing very well, but particularly the paint, plasticizers and the PVC, they are doing extremely well. We are also supplying to a lot of specialty chemicals. I think most of the specialty chemicals also. There, of course, we have started 1 or 2 years back, but we have seen a good amount of traction and the growth, because all these companies are expanding their capacity, and they are supplying, like global market is looking China +1, and they are supplying to all the domestic players as well as international players. So when we see the growth plan and growth momentum in these sectors where we have recently added, so I think all the sectors are doing very well, but paint, plasticizers and the PVC were doing extremely well.
Okay. But I think in the paint industry, I think our contribution is much lower. So still you are
15 to 20% to paint.
Okay. So would it be possible just to give a ballpark number on our industry exposure? Let's say top 5 industry there, like for 20%.
Put together is 50%. PVC pigments are around 15 to 20%, and then balance 30% all the segments. It comes UPR, specialty chemicals, and other chemicals.
Okay. And so one last question from my side, if it is possible, just to give the spread of that xylene and PAN for us as of now.
Specifically in the market, it keeps on changing. Right now, it is between 150 to 250. Spread for phthalic anhydride.
Okay. So 150 to 250.
150 to 250. It is ranging between for last 1 month, 1.5 months. And for the malic, whatever is the price is the realization, because for that, for us, there is no raw material purchase for the malic anhydride.
Okay. That is from my side as of now. I'll come back in. Thank you.
Sure.
Thank you. The next question is from the line of Chirag from Budrani Wealth. Please go ahead.
Yeah, good morning, sir. So just wanted to understand, so first of all, can you share the volume from, what are the volumes for Q3?
Generally, we avoid giving any volume per se, growth, but I can tell you 17,000 to 17,500 is the monthly volume. With 17,000 to 17,500 is the monthly volume we are operating at. Hello.
Yeah, you said spreads are around $150 to $250, right?
Yeah. I am talking about volume right now. You asked the question on volume. I Yeah.
Okay.
20,000 to 22,500 is the product level monthly basis, and the spreads are between $150 to $250. But
if you recollect, you said that, in Q4 that, it was an extremely good quarter, and you said, the profitability and the spreads are way too high. What we see is again
Q4
Q4 21.
That was exceptional one.
Yeah. But sir, the profitability, if I'm looking, this time also you have delivered very good profitability. What I want to understand is how sustainable is this, sir?
So basically, IG Petrochemical historically in 2017, 18, 19, where the other revenues from the other product was around 10 to 20 crore rupees. Today, we are having a revenue of more than 100 crore annualized on phthalic, on malic, benzoic acid, and probably DEP will be added. Then it will be around 150 crores. So all the profits on that, plus when the crude prices goes up, then OX and the PA also goes up. Then extra yield which you are getting is also able to realize the better profitability. Right now, the margin is in the historical average of last 10 years, $150 to $250, which is the historical average for last 10 years. It's ranging in last 6 months at the same level. Now, IGPL, the cost efficiency has also come into the picture because the PA4 operating cost is much less than the last 3 plants. Overall, the operating cost has gone down to around $80 to $85 compared to $100 earlier. Plus, overall revenue, now 12% of the revenue is coming from the other products, which has given a lot of stability to the earning. You will see a base is being set for the IGPL, and we are continuing to expect to perform in a similar way.
So, sir, this run rate is fairly sustainable, right?
Right now, I think run rate is coming around 45 to 50 crore quarterly. Of course, in some quarter, because of the better price realization, it is coming 60, 70, 75. But 50 is like base now.
You're talking about profitability, right?
Yeah, I'm talking about PET.
Okay. So in this
business quarters, if you look at last 5 quarters, it is like 50 plus profitability.
Correct. That's what I'm wondering. So you said, the when the crude rises, the spread also, orthoxylene price will move up, and correspondingly, the PEN prices move up. So that means that market generally maintains the spread. So why is it that in some quarter we saw the spreads are contracting?
It's basically all. First, let us understand the spread is determined by the international market. It has nothing to do with the Indian market. Spread is all the interest. It all depend upon the demand and supply. Why you are able to change the pricing based on the OX pricing? This is the function of demand and supply. If there is a good demand in the market, so whenever there is a change in the raw material pricing, you are able to pass on. When demand is impacted, then you will see there is a pressure on the margin side. Otherwise, it's fairly sustainable.
Okay. And so one last thing, sir, is there seasonality in demand? I mean, are all the quarters equal, or do you think there is
not exactly seasonality of demand, but seasonality of the particular industry you supply? Paint, generally, demand is low in the raining season. In Deepavali, November, December, paint is high. So we supply to so many industries. Every quarter, one industry is doing better than the other industry. So it's keep on changing quarter to quarter basis. But on overall basis, demand is good and growing at more than 6%. I think Indian demand has already crossed 480 to 5 lakh ton per year.
Oh. And so one last thing, sir, can you give me gross debt and cash on books?
Sorry, can you repeat again?
Can you share the number of gross debt and cash on books?
Gross debt is around 92 crore, and the cash, you wanted to know the cash on balance sheet, around 130 to 135 crore.
Okay. Thank you, sir. That's it from my side. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Nikhil Shetty from BP Equities. Please go ahead.
Yeah, thanks for the opportunity. And as IGPL is already operating at optimal utilization level, the following capacity addition is almost 2 years away, assuming no delay. So how do you see your top line and volume is growing in next 2 years?
I think today, based on the current pricing, the annualized revenue is expected to be around 2,000 crores, but there may be slightly change because right now we are very small in terms of revenue was around 1 crore plus in DP, which is expected to go up to 70 to 80 crore per annum basis. So we believe the top line, of course, when I'm saying top line, it's subject to the pricing. If crude goes down, OS goes down, PA goes down. So when we started, we expect around 16 to 1800 crore revenue. Now the prices of the OX, PA and crude has gone up. So it gives around 2,000 crore plus minus 5% on the overall revenue basis.
Okay. Yeah, but still, I mean, we are currently operating, volumes are almost at optimal level, and even DEP, if we take on a higher side, we can generate around 70 odd crore.
70 to 80 crore. Correct.
Yeah, 70 to 80 crore, and even in a maleic anhydride, which is currently at a, realizations are at a very high level. Even we take that
$2,000 per ton. Yeah.
Yeah. So you are targeting around 30% revenue from non-phthalic product in next 2 years.
3 years.
So yeah, 3 years. Then, I mean, how do you achieve
this? There will be expansion in the downstream derivatives, and there will be other products which is being added. Right now, it is in discussion stage. I can't share the detail much, but that is our vision to reach up to 30% of revenue. Right now, we are at 12% of revenue is coming from non-phthalic. We aim to achieve 30% by 2025.
So, any plans to add MA capacity?
There are plans for the downstream, including MA, but I think that will be discussed at some right time, because right now it has not been discussed. Right now, companies evaluating various options and other specialty chemical apart from the line of the phthalic anhydride and maleic anhydride. So I think you need to wait for 1 or 2 quarters. We will be announcing it soon.
So, okay, sir. And can you give us the average maleic anhydride price in Q3?
It's around, you can see $2,000 to $2,500 per ton.
2,000. Okay, and volume?
Volume, generally we avoid giving it to the annualized basis is 7,500 ton which we are producing. Accordingly, you can calculate this.
Okay, sir.
7 to 7,500 ton is the annualized capacity.
Okay, and the pan spread was around 150 to 250 for Q3, right?
Yeah.
Okay. So, and one more thing, what is the current price of MA in the market? Because I believe there is a contraction from the peak. So
no. So on peak, it was around $4,000, $3,500. Then it rose to $2,500. Right now, it's around $2,500.
Okay. Okay. Thank you, sir. That's it from us.
Sure.
Thank you. The next question is from the line of Alisha Mawala from Envision Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for taking my question. My question is also with respect to what the previous participant was asking, with respect to volume growth. So we are currently at peak utilization for our PAN capacity. Is that correct?
Yeah. For phthalic anhydride, we are at peak. Maleic also nearby peak. Right now, not at 100% peak, but we are at 80 to 85% in maleic. And DEP, we have just started. The contribution of DEP for the last quarter was only 1 crore. So that you will see addition of around annualized basis 70 to 80 crore in the DEP in revenue.
Sure. And is there scope for further brownfield expansion at our current capacity after PA5?
Yes. So we are adding the PA5 at our existing location only, which will add our capacity of phthalic anhydride by 53,000 ton and 2,500 or 2,600 ton of maleic. Right now, the capacity of maleic is around 7,500, which will increase to 10,000 ton.
Sure. And this capex of 350 crores we're aiming to do, this will be from internal accruals only?
So this capex, we wanted to do a mix of debt and equity. If you ask me, do we need money? The answer is no. We don't need money because we right now have around 135 to 150 crore. When I'm talking, it's 150 crore cash in the balance sheet, and we are generating around 200 to 250 crore every year. So fairly, if no expansion, company will have 300 to 400 crore cash. Having said that, we wanted to keep the cash with us and wanted to use 30 to 35% of cash of overall project cost, and we wanted to tie up with the debt which is available at a very cheap cost for a company like IG, which is rated AA minus. So we wanted to take that advantage and wanted to use that cash for the purpose of future expansion project into the other streams. So that will be used as an equity. Money will be lying in the balance sheet, but we will not be using that money right now for the purpose of Thalik. So we may be using around 100 crore for Thalik, 125 crore. Balance we are tying up with the debt because the debt nowadays is available at a very, very cheap rate, around 2%, 2.25% in case of foreign currency.
Okay. So at least about 200 odd crores may be the debt you may consider.
We may consider the debt. We may tie up. How much disbursement we need, we will take. That all depend upon the situation. Because last time also we tied up for the PA for 200 crore, but we have actually taken the disbursement of only 120 crore.
Okay, thank you.
Thank you. The next question is from the line of Mukul Maheshwari from Auriga Capital. Please go ahead.
Yeah, thank you for the opportunity. So just one question. If I just roughly calculate the spreads, you would be earning around $400+ of spreads. And you explained the fact that you now have the benefit of higher share of non-Thalik products, which straight away contribute to the bottom line. So when you mentioned the spreads for the long term for the last decade of being around 150 to 250, is this now move in the spreads more structural in nature given the changing composition of our business?
So basically the spread which I have told you is the spread available in the market. What IG is earning is because of the yield advantage, because of the byproduct which we are generating, malic anhydride, benzoic acid, and now of course the BP. So generally if you look at the trend, IGPL is making around 100 to 150 over and above the market. So if the spread is say 200, you will be making 350. If 150, you will be making 300 to 350. So IG is getting the advantage of the import parity because of the freight, insurance, transportation, import duty, plus there is an extra yield generated. If the price goes up, that yield gives us a better benefit. And then the prices of the malic anhydride, benzoic acid. Of course, BP has not been added. If you add DP, so I assuming right now if you look at malic, it will give you annualized revenue of 140 crore. But let's assume it's 100 crores. 60 crore will be the DP. So around 150 to 170 crore will be the other revenue, in which we will be making around 100 crore of PAT only from the byproduct. So that gives a lot of stability to earning compared to historical value of CC. 1920 is not a year to check or comment upon because that was exceptional year when the crude price has gone down to zero. Right. I think if you remove 1920, you will see fairly stable earning of PAT from 100 crores to 120, 30, 40. Now the orbit has shifted because of our byproduct has gone up. In terms of the overall revenue portion, we have get into the DP and the yield advantage and the PA costing advantage. All put together, you will see a fair, reasonable amount of EBITDA and stability in the profitability for IG going forward, which I think you are witnessing in last 3 to 4 quarters.
Okay. So if I understand that thing, so your the market spreads for Thalik has been between $150 to $250 for the last decade, except in FY20. And you've been able to generate $50 to $100 higher because of your own yield benefits, etc.
Correct.
And that has got further accentuated by the more number of byproducts and increasing scale of other products in your business.
Correct. More quantity of byproducts and other products which we are attempting. Yeah.
Right.
Absolutely right.
So if you put it this way, then this $350 to $400 kind of a spread is more sustainable. Obviously, with prices moving a bit up and down, but broadly that range could be more sustainable.
I think if market remains same where it is between $150 to $250, then that will be what will be the performance will be what is reflected in our results for IG. Of course, it may 5%, 10% here and there based on the pricing of the MA, based on the pricing of the DP. But more or less, now you will see the consistency in last 4 to 5 quarters where we are delivering 50 crores plus PAT is expected to be sustainable.
Okay, great. And secondly, sir, any large-scale expansions which you are seeing which could disrupt the demand-supply situation either in the domestic market or in the global market?
So I don't think anything, but I think 1 or 2 expansion is coming up in India because the Indian demand is very strong. It costs 5 lakh ton right now on an annualized basis, and India is producing 330, 340, and 150 is imported. Even the new expansion is coming in 2 to 3 years. The deficit will be 2 lakh ton. Somebody is setting up 1 lakh ton. I think so long as Indian economy continue to grow at a healthy level, infrastructure growth is directly connected with the economy. There will be a good demand going forward. I assume, of course, it's my personal view that it will touch 1 million ton by 2030. Metallic demand. Right now, this is 1/3 of that. Because if India continue to grow, and major thrust will be on infrastructure, growth is expected to come majorly from the infrastructure development. If you see the budget recently announced by the finance minister, there was a clear-cut focus on the infrastructure. Wherever there is a thrust on infrastructure, there is a huge demand for the Petrochemicals. Petrochemicals is getting into all infrastructure-related products.
And anything in terms of capacity expansions in the region or in Asia somewhere which could?
Not exactly. Very small brownfield expansions are happening. That is by way of debottlenecking. I think balance is what is being announced in the Indian markets. That's all.
Okay, great. Thank you so much and all the best.
Thank you.
Thank you. Next question is from the line of S.A. Narayan from Capricorn Research. Please go ahead.
Mr. Bhandari, I must compliment you for the level of response and the accountability that you have for your investors.
Thank you.
I also noticed that IG Petro is doing so well. Are we in line for crossing for the first time a bottom line of 300 crore?
I will not be able to comment on this. But we will be certainly crossing the last year's profitability, which is 190, which we already crossed. So
you have done last year's in 3 quarters.
Yeah.
Right. I extrapolate that you possibly will cross 300 crores. Please correct me if I'm wrong.
No, I will be able to comment on that. First, we don't want to give any estimation for the next quarter. And of course, you are aware of that. IGPL also takes the shutdown every year once for the purpose of changing the catalyst, which of course is not going to affect much because of the inventory we are carrying. But having said that, I will not be able to comment on what is the profitability of Feb and March. Of course, Jan, I can see that, but I think it is not correct to assume that it will be this much of the profitability. But it will be good profitability in consistently what we are delivering in last 3 to 4 quarters.
All right. I wish you well. Thank you.
Thank you.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question, and congratulations on a good set of numbers.
Thank you.
I just wanted to understand more of a hypothetical case which happened in past. So just wanted to understand if we take a hypothetical case where crude oil prices crash to zero. So what I understand from the conversation is you have that $150, $100 to $150 advantage because of yields. So you will still be making a profit, right, if crude oil crashes to zero?
Yeah, it will be because yes, company will be making profit. That is right.
In the range of 100 to 150, that the spread which you have because of yield.
Yeah.
Yes.
Even if it is the same case of 1920, repeated again in the next year, company will be making 100 to 150 crores back. So right.
Yeah, and it's like you told that the PA4 which has come now, the cost is further reduced to about $80.
Correct. Conversion cost. Yeah.
Yeah. So what would be, if I take the overall facility from 1 to 4, what would be the aggregate cost if I consider? So that is the $80 is the aggregate, including 1 to 4, or it's just for
80 is the, actually it was 65 for the PA4, aggregate is $80 to $82, which will further go down post PA5, but 80 to 85 is the fare you can take for all the plants together.
Sure. And with regards to PA, if I can understand what would be the current price correction compared to the average realization in Q3. So whatever was the average realization in Q3 vis-a-vis the current scenario, price scenario in PA, what would be the difference in terms of percentage? Approximate will be okay.
No, I'm not understood the question. Can you repeat? Because EBITDA margin for the Q3 was 22% compared to the 21.8% for the Q2. If you compare the corresponding previous quarter, because Q3 FY21 the margin was 30%, but here the volume was high. In spite of reduction in the overall EBITDA margin, you have seen the better profitability. So again, I am repeating the question. When you say that when the crude is zero, crude zero doesn't make any difference. Ultimately, the margin between the PA and the OX is relevant. If the margin between OX and PA come down to a level of around equivalent to conversion cost, still company will be making the profitability which we have indicated.
Oh, okay, got it. And just to rephrase my question, if X is the, for example, if X is the realization of average realization of PA in the third quarter, what would be that realization currently in the 1 month in the fourth quarter? What would be the difference in percentage approximately?
So it is not possible to give the percentage because right now the crude price is up, phthalic price is also up. Of course, we have taken the shutdown for the purpose of changing in the one of the unit catalyst. So margin right now is in a similar range. However, you need to see what is the effect in Feb and March. Demand is good. We are able to sell because earlier we had some inventory of around 7,500 tons. Today it has gone down to around 2,000 tons. So basically demand is good, margin is good. It's all dependent upon what is the situation in the next quarter. So I will not be able to predict what is going to be the profitability. One more gentleman has asked that question. I think it is not fair to assume and look the performance of the company quarter to quarter basis. It doesn't make any difference. Of course, when we are talking about long term, let's look at the average for the 1 or 2 years. Because one good or bad year is not determining the performance of the company. What is consistent? Like if you see the last 4 quarter companies giving 50 crore plus PAT. How it is sustainable? It's sustainable because of the efficiency in the yield system, efficiency in the operating cost, and byproduct are generating good revenue. And that is expected to be continued. It may be same or it may be higher than that, it may be lower than that, but still company is maintaining the similar type of profitability. That's all.
Sure, sir, I agree. And lastly, one question, like earlier you said that you are looking at debt because of the low cost of debt currently. So the maximum debt which the company might think of taking would be like about 200 crores for the PA,
no,
right?
I will correct you again. We are not looking for debt only because it's cheap. Right now, you need to see the composition of debt and equity. Every project which comes with the composition of debt and equity is able to enhance the overall equity value. That is number one. If you keep all the equity and put in the project, there is no enhancement to the shareholder value. Number one. Number two, you always need to conserve some resources like 200, 300 crore cash, so that when we are planning for some another expansion of another product, you have good amount of money available. Around 50% is available for that project cost as an equity. So that is how we are looking at it. Ultimately, when we are planning to expand our capacity in various streams, we wanted to be very sure that whenever we expansion in next 1 or 2 years, we again become net debt zero company. We are, if you can say that we are conservative and we wanted to remain conservative. We don't want to raise unnecessary debt. We wanted to tie up with the debt. However, based on the requirement, we draw the money. Last time we have tied up 200 crore. We have taken the drawal of 150 crore, and within 1 month of start of project, we prepay 35 crore. So this is how we look at that. We at any point of time, once we complete our expansion in next 1 to 2 years, we again wanted to become net debt zero company.
Okay. So if I look at PA5, the cost would be about 350 crores for adding that PA5.
Correct.
Correct. So 350, you already have 150 approximate crores in cash. You generate about 200 crores. So you already have 350 crores, which you can do from internal accruals. But you would like to conserve 50% of it. So approximately, it will be like if you conserve 50%, you will take a debt of about 150, 175 crores, which will repay in about 2 years.
Suppose you have taken a 175 crore debt and you have 250 crore cash in the balance sheet. There is no problem. If you are net debt.
Okay. Okay. Yeah, sure.
Whatever cash you keep in the balance sheet and take the debt, because you can deploy the cash flow to generate the better return. Right? That is available at a very, very cheap rate today.
Yeah, sure. Yeah, thanks. That's all from myself. Thank you, sir.
It always makes sense to conserve the money and keep the money as an investment in liquid, so that if there is any opportunity, you are able to use that money available in the company. Thank you.
Yeah, thank you very much.
Thank you. The next question is from the line of Aditya Khetan from Smiths. Please go ahead.
Sir, thank you for the follow-up. Sir, my question was on the DEP revenue for this quarter. So how much is the revenue?
1.1 crore.
1.1 crore?
Yeah.
Okay. So, sir, on that basis, if I calculate the average realization of PAN in this quarter comes to around 85 rupees a kilo, whereas the current prices you are talking of, that is around 105 rupees a kilo. So how do you see the current top line?
Because quarter ended in December, the crude prices has gone up in January, OX prices gone up in January, and PA prices also gone up in January. Right now it is $100 rupees plus for the phthalic anhydride.
Correct, sir. So that's what I was talking. So what is the what would be the revenue forecast like for the next quarter, considering 507 crore is on 85 rupees per kilo?
I think it's better to remain in the same range rather than, because there is some maybe slight impact of the change in the catalyst also. So it's better to take, we are being in the same range of 450 to 500. That is what expected based on the today's pricing.
Okay. And sir, the spread also, like for the quarter is around 30 rupees a kilo, considering your spreads only particular, not talking about the general spread.
I can't predict the spread for the next quarter, but of course you are right for the purpose of this quarter. But next quarter, let's wait and watch. We are again going to have a call, and next time on the call we have Mr. Nikunj Dhanuka MD, because we have decided every quarter we'll take the call, and the yearly call Mr. Dhanuka will also be there on the call.
Okay.
So let's wait for that. That will be somewhere in May, post our result.
Got it, sir. Sir, just one last question, sir. On the plasticizer, so what is the current utilization in this quarter?
So utilization was very, very minimal. We produced, there are some teething issues which have been sorted out. You will see around 10 to 15 crore revenue in the next quarter from plasticizer.
10 to 15 crore from the next quarter.
The gross margin, of course, the quantity is very small, it's 10%.
Okay. Got it. Thank you, sir.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Pramod Bhandari for closing comments. Over to you, sir.
So, my dear friends, the only conclusion remark I wanted to make is the per capita consumption of various goods and services which we find application in the pen is very low in domestic market. I have given you the example of the various products which we use, like UPR. In India, we supply 1.5% to UPR. Globally, the pen is consumed 26% in UPR. With the rising income, continuous government spending on the infrastructure, we foresee good demand of pen and its derivatives, which continue to grow at a healthy level. And that is the story linked directly with the consumption and the infrastructure growth of the country. With this, I conclude this call. If you have any query, please get in touch with SG, our investor relation advisor, or send a mail to me. Thank you very much for joining this call. Once again, be safe, be secure. Thank you.
Thank you. Ladies and gentlemen, on behalf of IG Petrochemicals Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.